Hello, welcome back, guys.
Hi.
Hi. So, I think 1 week has passed, but compared to 1 week ago, this week something happened. Selangor and KL are going to be in their CMCO phase again, and I hope you guys stay safe. Those who are in KL and Selangor, but overall, if you are still in Malaysia, do take the necessary precautions, practice the good hygiene standards and guidelines lah. So yeah, I mean, COVID is a thing that once you are not once your gut is down, then it will come back again. So back then when things were recovering, we did say that okay, everything looks good, but you can never ever say that we are out of the woods already. Second wave or third wave is always on the cards unless maybe like Singapore where it's really down to single digit cases every day. So but over here it's still also very kiasu. People are still wearing masks, people are still practicing their all the good precautionary measures. So it's sad in Malaysia that things took a very unfortunate U-turn. So yeah, today's company is one that I think a lot of people wanted us to do this last week, but it got delayed to this week. So it's about Dufu. Maybe I would ask Sean first. Were you familiar with this company when you were investing?
No, I think this is the first time through this exercise that I look more into this.
Okay. And what are your preliminary thoughts when we decided to actually look at this company? Does it pique your mind to say, okay, tech company, okay, tech, what does it does? Because tech is such a big umbrella. Yeah, many businesses under the tech umbrella.
Well, first reflection is I think, we always know that there are a lot of tech companies in Malaysia, but we don't really know what they do until you really start digging into them. And then now that you look deeper into Dufu, then you will see, oh, okay, there is a Malaysian company that does, something quite big outside of Malaysia that we don't know. Yeah.
Yeah. What about you, Chumbeng?
Yeah, I think it's not familiar with this stock, but until we did UWC last time, and then we sort of go into this precision engineering kind of industry, then that's the first time I actually have a look on this company. And then of course there are some comment or feedback on this company. That's why we agree to proceed with this lah. I think we can start already. Yeah.
Okay. So as usual, the disclaimer, this is for just sharing and educational purposes. Do not take it as a buy or sell call, and do your due diligence and further studies before you make any decisions. So yeah, today's talk is about Dufu. It is a company. It was established in October 1987, and under the Dufu Group, there are actually three companies. So mainly Dufu Industries, Sdn Berhad, IPG Metal, Sdn Berhad, and also Futron Technology Limited, which is in China. And if you want to know, basically Dufu Corporation Berhad is the one that is holding on to these three companies. These three companies below Dufu is the one that's actually running the plants, running the factories or whatsoever. So yeah, but when you buy the listed company, you're actually getting a little bit of everything of the three businesses of this subsidiary under Dufu lah. But fun fact, Dufu is actually coming from a Chinese word, from a Chinese poet in ancient China, Dufu. So I don't know why the founders decided to name their company using an ancient Chinese poet's name. I don't think they mentioned it, but it just kind of subtle that when I checked the company, they have a Chinese name, and the Chinese name is just exactly the same as the ancient Chinese poet's name. Yeah. Maybe Chun-Ming, you want to take this one? The small companies or subsidiaries under Dufu Corp.
Yeah, I think it's quite straightforward. Most of the company, which is the subsidiary of Dufu, is wholly owned by them. Only this Dufu matter that recently got completed is 75% owned by them, with some expansion plan in place. So it's quite straightforward. They just see Dufu Technology Corp Berhad as the listing vehicles, like what we mentioned in the previous slide. They combine all these things and then make it into one entity to go on Bursa. So it's quite straightforward. Don't have any fancy one in terms of company structure. Yeah, I think we can go to the next slide.
So I think this is what we always want to emphasize and look up. The first thing when you look at a company is what do they do? What do they do for business? So before we actually look into Dufu, and previously when I was discussing Dufu or people come to me and say Dufu, the idea that I always have about Dufu is, they make hard disks, they make HDD. But if you really want to be honest, they don't really make hard disks. They are not like Toshiba, they are not like Seagate, they are not the one producing the hard disk. They just manufacture the components of making a hard disk drive. And more often or not, this kind of explanation of a business of what they do, if you do not tell it properly, then it will give people a different reaction. So basically, back then, when people tell me that they are in a hard disk drive business, I thought that they were making hard disk drive, and hard disk drive is slowly not becoming that lucrative, especially the consumer hard disk drive, because everything is on cloud now. We tend to save our stuff on cloud. We don't carry a portable hard disk drive along with us. So back then, I just discredit that, sunset industry. I didn't bother to look into it deeper. And when the opportunity comes up for us to look deeper, then I was like, alamak, how come people keep saying they do hard disk drive? They never make the hard disk drive, man. What is this kind of a misconception comes up to my mind. So yeah, that's what happens when you tend to make your decisions too soon. So yeah, Sean, so when you look through here, they say that they are in a precision machinery components business, and they sub-target the HDD market. Does that make you more comfortable that being in a precision engineering business is actually more potential than being in a consumer hard disk drive business?
Yeah, I think like precision machining components sounds like a very technical word. If you're not an engineer by background, maybe it's not easy to understand. But there are always two sides of things, right? So you can be the supplier to the hard disk drive and you still benefit from it. And not to say that the HDD industry is not a lucrative one, but of course there are a lot of different other players there that are maybe more international and prominent.
Yeah. So I think when you talk about offering a service that you have the skill and you have the facilities to actually make components that must be precise, then it somehow opens up new boundaries and new channels as we slowly venture more into the tech scene. Because wherever you go, tech is always supported by two great pillars. You either have very good software, and also need to have a very good hardware. And when you talk about hardware, it's about how small, how sleek, how fast. All of these requires a very good craftsmanship when it comes to your precision machining parts. So if you are very good at that, you probably would find yourself become valuable when science and technology tends to zoom more in focus when it comes to more high-tech kind of hardwares and also components. So they are in the precision engineering industry. They are not manufacturing this hard disk drive. So yeah, this was also what I initially thought, but after we go through this company, we know that actually it's an interesting company. Maybe Chubeng, let's go deeper on why people keep on thinking that this company is very important for the hard disk drive industry.
Yeah, but of course, they are not the one who package the entire hard disk and sell it as a product. They did a very core component of it. But before we go into the core component, this is how it look like if you go and open up your desktop or laptop. This is how the hard disk typically look like. They have a disk, have the read, write prop, and so on. But if you go to the next slide, right, meaning you take out one of the disks, right? So there's one circle we particularly pointed out. So there is a spacer ring that connect the disk in between. So they have multiple plater, and then this is like the holder. Why is this important? Is because for hard disk, they tend to be they have a very high requirements on accuracy, because when you read write, it's not accurate or not stable, then you might not read the right thing, or you might not write. In other words, you might not store the right data. So this is very, very important. And what Dufu did for all these hardware hard disk supplier, they just do the ring, not the other thing, not even the prop, not the plater which look like a disk, not the entire frame that they hold it. They just do the ring. Bear in mind, they just do in ring, and this is enough to support their entire performance for revenue. If you go to the next slide, then a couple of big company actually get the services from them. So of course, like most of the Malaysian company into not semiconductor, into manufacturing or tech related kind of company, usually they rely on a few key clients. Dufu is the same, and Dufu, beside relying on a few key clients, they particularly in this hard disk industry, just one industry. The rest, even though they're saying they have expansion and whatnot, still very, very small. And then these two customers actually contribute about 60 to 67% if you see the result from 2018 and 2019. And of course, they didn't disclose it, but we try to get from news or whatnot. So typically, these are the two biggest contributor to them, Seagate and also Western Digital. And if you zoom in further, the next slide. You will see in 2019 alone, they are big chunk of revenue come from Thailand. And what we are aware from the reports and so on, they get a big contract or big business from Seagate Thailand. So we can safely say the customer A or consumer A is actually Seagate. The second one should be Western Digital, but nevertheless, two of them is very big in hard disk industry. So they are serving both of them. So I think it's kind of important that they are not like Great Tech that serve one particular solar company, but they are serving two biggest major client or major player in the industry. So it's very, very important. And then of course, till date, they are still very focusing in Southeast Asia, because most of these Western Digital or Seagate, they have different factories throughout these countries. So the key one, somewhat it come from Thailand. Maybe Seagate have a strategic meaning behind why they choose Thailand to be the plant for them to manufacture the stuff. This one we don't really have the info.
So yeah, it's pretty much interesting. And of course, Dufu is not the only company in precision engineering. Previous weeks, we have also touched upon companies like UWC, who are also in the precision engineering company. And just happened that they serve the different industry. So, but if you were to look at other precision companies who also make this ring separator, you might notice that it's not just Dufu eating up the pie. There are also other companies that are also supplying to Seagate and Western Digital for the similar parts. So you see the competitors part, you have this Precision Industries, Private Limited, Singapore, and Global Primax, China, still supporting the same stuff to Seagate. And for Western Digital, you also have the same company, and also Notion VTech, another tech company in Malaysia, also supplying similar components to Western Digital. So it's not a huge pie where Dufu can eat it all. It's probably going to be a huge pie where the best company maybe takes a bigger piece, bigger chunk, while the smaller companies fight off, and it's an ongoing evolution thing. Eventually the second best company can outperform and become the best company, we never know. But this is a kind of a business where it's a free-for-all segment, and the best company will always win. So you might need to believe that Dufu is going to be the best for quite a number of years, because they have certain advantage, so that it only gives you the bullish case to actually invest into a company like Dufu, since they are so heavily reliant on Seagate and Western Digital to buy the deseparator wings from them. So coming to the income statement, maybe Sean, you would like to give your thoughts on how Dufu has been performing for the past few years.
It looks steady. It's a steady uptrend over the last 7 years. I'm not too sure how next year will look like. But then, as you pointed out here, of course, there are a few things that will affect the income of it, right? For instance, all the raw material that they have, any new expansion, and also the limitations that we have from MCO. So all these, as much as we can say it's one-off, but it will continue to be, of course, a business risk for Dufu as we move along. And then also, if you look at where the revenues are coming from, it's quite diversified with across a lot of different countries, and especially if you see the higher contribution from Thailand, and throughout the last 1-2 years, the Thai baht has been getting stronger and stronger. So of course that will have quite a significant impact to the group when you look at their annual report as well.
Yeah. And also, if you read the global news, you'll notice that there have also been some protests in Thailand, some demonstrations in Thailand. So I just read about, I knew there was a protest. I never knew what happened. So before this live, I was spending my time reading up what happened, what triggered the protest, and automatically it will link you to companies that have businesses in Thailand or are listed in Thailand and whatsoever. So you always have to, I wouldn't say be paranoid of the news, but you always need to know that if your company has major part of your income or partners or clients in Thailand, if something happened in Thailand, would that impact their business? And if that impact, by how many percentage? So you roughly get a gauge. And if you're comfortable even with that kind of risk, then only you can justify yourself to buy a company. Because a lot of people, they tend to just disregard the risk, and something bad happened to a specific country, then the company share price suddenly drop, because the big boys will be selling off the shares if they think they are not comfortable with the position, and you are left with the one puzzled and asking why share price down, and historical trends have been so fantastic. So always try to look forward and look at what are the risks first, and when it happens, only you will know what happened, and you will only know what to do, because that is the most important thing when it comes to investing. It's not asking why, but okay, what is the next step once you know the risk is there. So yeah, I think we pretty much sum up the risk. Raw material prices is always fluctuating, and they had a one-off cost in last year, and of course MCO impacts will definitely eat into the 2020 results lah. Anything you want to add on, Jumbeng?
No.
All right. So yeah, next we look at the balance sheet. So one glance, it looks very good, but I let Jumbeng take it off from here.
Yeah, I think all these companies always good when we see the red color bar is very small if compared to the blue color bar. meaning this company is rich in cash or asset, and they are very resilient when comes to times like this. So I would strongly believe over the year that all the things that have been built up, and also dividend have been built up, they are still can have this kind of position is a very good management from the management team, and then this is a very good result in my opinion, and they has been in the market for quite long, and it always deliver the result. So I think this is why a lot of people like Dufu. It's not like people always say Mohamed Salah is a one season wonder, but it keep on score since they got listed. For Dufu, I think it's a very good, but of course, still very much dependent on hard disk industry. Although the consumer seems to be on a downtrend, but cloud is picking up. So for them, it's not a big impact from a sales perspective. The risk is really how far can this go, the hard disk industry, or is the ring they are producing are strong enough that don't have any competitor can come out. For example, Notion suddenly come out and take all their clients. So this is all the thing that Dufu need to take note. If we are in the field, we need to take note.
Chun Bing, if I can ask you a question, so for hard disk, right, we are not just talking about portable hard disk, right, but it could be for other applications, right?
So it's true to a certain extent that we don't need hard disk anymore for consumer perspective because we subscribe to cloud. But cloud also need hard disk, the data center. So from Dufu perspective, I don't think they have any big issue. I believe Western Digital or Seagates, they are trying to go into the cloud space as well. So it's still all right, in my opinion.
Because at the end of the day, HDD is still cheaper than STD, and it makes sense for big cloud or big infrastructure players to still maintain their infrastructures using HDD instead of solid state drive. So totally different things, but HDD is still relevant because it's cheap for infrastructure. So next we look at cash flow. As usual, if your company is reporting good profits, definitely cash will come in. If cash never come in, then you should be asking questions. And if the company is also still looking to grow, definitely you will see the investing portion also increasing as well. And financing is just how much money they raise from the bank and how they manage their cash flow. And I think one of the good things you can see here is that it has, although it's still in the engineering company, but precision engineering company usually have that kind of, aura or that kind of ability to become very cash rich. This is not the first engineering company or tech-related engineering company we are sharing today. If you look back previously, there are a lot of tech precision engineering companies who also keep on do business, and they just collect more cash, and the cash just gets bigger and bigger and bigger until it becomes very safe and becomes net cash position and always consistently free cash flow. So when it comes to that stage, either company can pay more dividends or they can look into other things to invest. It's just up to how the founder or the management team wants to grow the company. So it can be they reach a stage, but I don't know about your thoughts. Can a company like Dufu stay complacent? This is all I want to do, and I don't want to look into other things to invest really. You think it's possible?
No, I think it's possible because in my opinion, for cloud that is taking over the physical hard disk is still on the uptrend. There will be more and more demands and so on. Maybe 5-10 years later, we won't comment the same, but I think the near 2-3 years shouldn't be a problem. It's like IGB REITs rely on the two shopping mall. Although now it's CMCO, I think they got hit badly, but then they are still strong with just these two, and they can continue to reap from the original investment. But I think nevertheless, the latest slide will share what is their expansion plan. So they are not only into this hard disk industry, they try to go into somewhere else. So I think this is one of the good things that Dufu has. So I think
Okay, so yeah, we will touch on that later. But yeah, this is also a company that is not kiam siap or not stingy when it comes to dividends as well. Although you might not really catch the trend there, but of course you have to also give some layback or give some ways for the company to manage their money, because there are some years definitely the company will need more money to grow, and you cannot penalize the company just because okay, this year company need more money to grow and hence dividend got cut, then you don't like the company or then you hate the company, because at the end of the day the company always need to come up with ways and strategies to stay relevant. If the company never think of any way to stay relevant, forever happy-go-lucky, then you will have companies like Star Media facing a very big disruption. People get their news from Facebook, from Google, from Twitter. People don't buy physical newspaper anymore. And this is when the company's business totally get disrupted. And when they go into the digital news, it's also too late really, because definitely there are other earlier players who ventured into disseminating news online. So they are not the key player online. Plenty of other competitors. And when that time comes, it's really too late for the company to pivot and to go into a new business. It's too late. It's considered the milk has already been spilled on the floor already. So you cannot penalize a company when they decided to look into other expansion plans just before danger hits them. So you have to give them some leeway. Reduce dividends doesn't mean that it's not a good thing. It's just that company really has to conserve cash and do R&D and look into other stuff to expand too. But all in all, if the company does not have any big cash they need to expand, they will still pay you increasing dividends. But you just cannot expect it to be very, very consistent. But overall, it's a good dividend paying company for the past few years. So one of the key criteria when we invest in companies is that we want to know that how much stake your management team or your key stakeholders have within a company, and only then we feel that the management team will make decisions that are most likely going to be in line with small shareholders like us. So Tremaine, you want to take this?
I think the reason why the company got named as Dufu, I think it's because they are true Chinese. they have all this Tianghua thing, all this culture groom them up. So the founder is actually from Taiwan. Not only one of them. Why? Of course, we already validated but if you are trying to see whether they are Taiwanese or not, I think one of the key things that you can see is typically their first name will have a dash in between the name. So let's say Toyota with the dash. This is how Taiwanese name their as in how Taiwanese need put their name in their IC. So it's quite typical. The one with dash is most usually from Taiwan. And then of course not only Taiwanese, they work with some Malaysian to set this thing up. And then as part of the setup, they have also acquired a company in China to make all this production possible. So Malaysia one is more of R&D, and then they got one manufacturing factory in China as well. So this is the summary. But as usual, all these founders still hold a major share in it. Skin in the game is a must, and it has been so many years, and then they didn't really have a massive dilution that happened to the founders. So it's quite safe that they are very confident with the outlook of this company in the future.
All right, that's good. That's good. So yeah, you'll keep saying that they are very focusing and heavily reliant on their hard disk drive business segment, but nonetheless they also know that is the risk, and every company, they know that when there is this kind of a product concentration or segment concentration, they need to come up with alternative plans so that let's say worst case scenario, they become obsolete then you have a plan B in hand, and you can grow that plan B to become your next plan A, and your company survives. Your company becomes relevant and sustainable. So yeah, I think as the first point, Chun Ming already mentioned this now, data generation businesses is definitely going to be a huge thing in the next few years. And if Dufu can continue their current competitive edge and advantage, continue to, produce and service its key clients like Seagate and also the Western Digital, business will definitely go on, and business will also continue to grow as well if nothing bad happens. That is a key point that you need to answer. You need to be quite certain of. And we also talk about they set up a new plant called Dufu Metals in Urian Berhad, which they own around 75%. So in this new business or new Urian Berhad business, they say they offer one-stop solution center for specializing in sheet metal and so structural fabrication for manufacturers. And if you watch back our previous companies, this is already entering into a realm where they are going to go against some of the other precision engineering companies like UWC. So there are a lot of Malaysian companies which are very good at precision metal and engineering, and you also need to know which segment they serve, because some of them are very niche. They just serve the airline industry or aerospace companies. Some they are more to what also they do, because they have the flexibility to serve clients from multiple industries. While some only they just serve the semiconductor industry. So different segments, different sector will give different catalysts and different PE valuations when people or investors buy into a company. Because when you buy into a company, you buy into the future prospects. If the company is servicing an industry which is going to boom, going to become very, very profitable, or going to grow at a very fast rate, automatically you see the company trading at a higher PE. Then maybe that's a way to also highlight which companies are in the right industry. But of course, you have to go down deeper and see how sustainable is the growth trajectory. Is it just a 1 or 2 years thing, or is it a more mid-term and long-term horizon? That kind of justifications when you want to buy high PE companies, but in a very good growth segment. So yeah, maybe I let Chun Ming to take on this one, another prospects of Dufu.
Yes, I think out of all these hard disk data business in the future, I think they also into precision engineering, and they try to utilize what they can do. And this is the latest track they try to crack. I mean, latest space they try to crack in, which is the automotive industry. They has made a very big session in the annual report saying they obtained the IATF certification. So IATF is actually International Automotive Task Force certification, which allowed them to enter the machining precision for the automotive components. So they probably see the importance of vehicles. I think particularly on the future vehicle, which is electric cars, be it hybrids or whatnot. They try to have a foot step in it starting now. But nothing concrete yet beside the certification. But I believe in the future year, they will start to show more and more investment into it. And they might, you might see, instead of hard disk, this can be another industry that help them to grow further. So I am quite excited with this growth. Hope to see more coming, because precision engineering is quite a high barrier for any other player to come in, and they already have this experience. Is how they use the experience. They have to go into different industry, and getting certification is the first step, and they have already done it last year, so it's a good sign. Yes, we can go to the next.
So maybe I'll let Sean take this one. Judging that we have come across also a good company today, Dufu Corp Berhad, we talk about how have they grown during the past few years, and the margins also has been increasing as well. And just this past 3 years, you see the margin going flat a bit, but nonetheless, it's still very juicy. I think around 20+% for precision engineering companies. We talk about how they are in a lucrative HDD business component part, and we also talk about their future prospects. But as always, good companies, bad companies always have risks. So what are the risks that you might foresee in a company like Dufu?
Yeah, I think you got it on the slide. So, of course, the first thing, it's not just unique to Dufu, but to a lot of other companies that we have reviewed recently also, is that they are quite reliant on a few key customers. So for this instance, I think we covered it already, the two. And then when it comes to foreign currency, we also talk about how we do business with different countries across, right? So just now, if I remember correctly, Thailand contribute about 140 million ringgit. And as we mentioned that the Thai baht is getting stronger and stronger over the last 2 years. So that will, of course, affect the profitability of Dufu in Malaysia. There are, of course, a lot of intellectual properties also. I don't think we have enough detail to say what kind of IP that this company have, but if you just look at it from an outsider, it is all these components for hard disk drive, but how well protected are all these things that they supply, we are not too sure. So that could be a risk as well. And lastly is the raw material cost. Again, as with other businesses, all businesses require raw material, right? So for this instance, it's titanium. And as we also saw or showed before, the price is also on the uptrend. Yeah. So these are the few key risks that we see for Dufu in the coming couple of years.
So maybe I'll bounce it off Chun Bing first. This is maybe the latest valuations of Dufu. Tell us your thoughts about it, and are you comfortable with today's valuation versus the business model that Dufu is having?
Yeah, I think, of course, 35 is not too high compared to Franken's revenue and so on. I think out of all these companies, it's kind of, I wouldn't say it's very cheap, but then it's competitive if you talk about the PE. But of course, I don't really have this thing in my mind. I mean, what is the PE to growth? We might need to check back the slide that we have, the earlier slide. What is the PE to growth, to see whether this can justify us, can justify to buy now or not lah. But I mean, overall, the first glance, they are not very expensive in my opinion. And I am a strong believer that data business will be growing in the next few years, unless hard disks have a great breakthrough. Maybe you're not using this technique anymore. Then maybe they will be in a great risk. But for now, I don't see any big threat coming in.
I think dividend yield is also quite okay for a tech company, and they also have a dividend policy to pay out 50%. So yeah, as of today's closing price, if you were to buy it, trailing dividend yield, you get around 2%. Of course, 2% is not like very good, but for you look at Dufu purely from a growth company perspective, cash generative business, and then they can commit to pay 50% out of their total profits to shareholders as dividend, and they can still continue to grow and grow just because to grow this business is not that you don't need to reinvest 100% of your cash to continue to grow business. So it does seem a bit interesting to actually get a dividend yield of 2%+ for a tech company that is still considered. I still consider Dufu as a growth company. But what about your thoughts, Sean?
Yeah, if you look from 2013, it has been growing steadily, but the last 2 years is a bad year. So I don't know if we can get a very accurate growth factor in place. But considering, as what Chun Beng has also mentioned, that don't limit our thoughts that the HDD is just the portable hard disk that we used to carry, and then it plays a big role in cloud computing, AI and all that in the future. So yeah, I think there's a lot of growth to where Dufu is playing.
So yeah, I think we might be maybe on this time we might agree on the same ground that yep, PE 35 is not a typical company that you'll buy if it's in another industry, but if it's in a tech industry, it's in one of the key service or segments that is poised to continue to see sustainable growth. Actually, not an expensive price to pay if you are willing to hold on to this company and enjoy the growth momentum for the next few years. And to just get 2% on a growth company is something quite rare, because the true growth companies or the true tech companies, they never pay dividend. They just invest everything. So I think maybe this is one of the benefits investing in tech companies in Malaysia, is that you still get a dividend. Tech companies in US, seldom you get dividends. I can only name a few tech companies in US, like Apple, who still can pay dividends. So yeah, I hope we really break through your thoughts and mind when it comes to a company like Dufu. It doesn't make the hard disk drive the whole thing. They just make a small ring. So with this one ring, they particularly rule them all. It's precision engineering, and it's the skill, it's the technical know-how that lets them charge that kind of price when it comes to just making a small ring inside a big hard disk drive component. So thank you for your attention, and we will now go to the questions that you may have.
I think we have one comment regarding. I think it's a real-time feedback when we talk about they are into a business that's quite resilient. Yeah, provided SSD don't have any breakthrough. If there's any breakthrough in technology for this, the ring, no matter how good quality they make, might not be relevant anymore. But as of now, there isn't any obvious technology that going to take place. Not even something that is in the pipeline that someone has already announced. So I think near term, this will be still the common or the standards storage product that most of the people will go for. Then the next question is from Alvin. I think they're asking about, is cloud storage a threat to their business? I think like what we mentioned before, it's not, because they are ultimately cloud is just a place with a lot of hard disks, and then they
big hard disks.
And they have some sort of software that allow people around the world to subscribe and run their storage space or hosting on top of the big hard disk concentrated in single place. So it's not a direct threat. I would say it's a replacement. Seeing from the trend of people owning a hard disk, now everyone go for cloud, but they still need the component from Dufu to continue produce the hard disk.
Yep. I think a lot of things will come cheaper and cheaper. When it comes to tech, usually when something becomes mainstream, it will become cheaper and cheaper. The same things, if you remember back then when we first launched 4G, all the telco companies were offering crazy prices for 4G. I think 4G subscription or 4G data, back then you get chicken feed gigabytes, but they still charge you 100 plus, close to 200. If my memory serves me well, back then subscription with telco companies for 4G is close to 200 ringgit. And then only you see the prices coming down to maybe 100 plus ish, a little bit above 100. Yes, SCD will come down. I think HDD also came down a lot. Things are getting cheaper when you have scalability, you have economics of scale. When more and more people ask for it, the buying power is there, and the machines can churn out more. Then, if you're not just in a business where you eat everything, you compete with other players, then everyone will just go into a price war to offer the sharpest price to the consumer. So SCD is getting cheaper, but I still don't think it's going to be as cheap or cheaper than HDD, because HDD technology is basically old school, very, very old school technology, but it's just efficient in terms of pricing and reliability.
Yeah, I think today the audience is quite quiet. Same
Quiet.
to the street outside my window as well. I don't see a lot of car because of CMCO. But anyway, I think today we have a very interesting IPO, and I think the price will shoot up quite a bit. I'm not sure whether next week we want to talk about the next IPO or not, or we continue to talk on
what companies?
Yeah, because we haven't locked down. If you guys have anything in mind, probably you can comment now. Then we will immediately look into it. Until now, we haven't locked down what is the topic that we wanted to share. And to us, most of the interesting technology company in Malaysia, we have covered quite a bit. And we are trying to see whether you guys have any particular company want us to cover or not. Which company is Dufu competitor? We have one slide talk about this. Notion is one of it. If you talk about, if the client is Western Digital, then Notion and another company from China, forget the full name already. If you can scroll back to the replay, you'll see the name of it. They do have competitor, but only a few.
I see a few companies. Okay. Would you say Dufu is still worth buying now? It has been on a slow and steady uptrend. Do you think there might be a drawback that's a good to add on more shares? I think rather than see things your way, I would probably ask you from the other way. Do you still see Dufu in their current business model, and the current business model is still sustainable or not? Do they still produce this ring separator to Seagate and also Western Digital? And if that question is answered, if there's a drawback, do you think it's a good chance to buy the shares or not? Because if you look at the price point of view, things get a bit, it becomes a guessing work. But if you look at it from a business point of view, you know the business model, then automatically when there is an opportunity, you will be more comfortable to buying more. So maybe I did not answer your question directly, but I hope that the question that I asked you back will make you think clearer when if you are an investor and you see the share price correcting downwards and you feel there is an opportunity for you to buy more. Ultimately, it's the business model that will make the price go up or sustain at the level. If the business model kaput, how deep the share price go, it will go deeper and deeper one. We already have examples like BAT, Star Media. So yeah, low is good, man. So you buy and it goes lower and lower and lower because the business model is no more competitive. The business model kaput already. So you have to ask yourself, is Dufu's business model still intact and still have the potential to grow? If you're very comfortable, then if there's a correction, then you know what to do.
There are a few companies being mentioned. We take a look on it and stay tuned to our next week sharing. And then we have one question coming in also.
Wow, this one is also another guessing work. Okay, I think we can entertain a few. This is purely guessing. I really don't have any crystal ball, but I don't know what you think. Chun Bing, you think Top Growth can surpass Maybank Cap this week or this month?
I mean, personally, I've been looking down on Gulf stock since day one because I don't think this is an ever-growing industry. But maybe I'm wrong lah. Because if I coming in on a trading basis, I think I will make quite a number of monies. But I think they will surpass this on the momentum, especially on the banking industry. Moratorium is back. Non-performing loans ratio also going up. I think a lot of people have lose a little bit of confidence on bank, and it takes time for them to recover. And there isn't any other stocks that have the potential to as in people have the confidence for them to put the money in. I think Top Growth is one of it. Given the number of COVID is going up these few weeks, I think Top Growth definitely have a chance to surpass. It's a matter of time, but I don't think it'll stay long. And also there's also some news that they're going to raise a very big fund from Hong Kong Exchange, right? So all this is a very positive momentum that they can bring this up. But if you go in for short term, it's fine. Long term, it's a matter of time. You got trapped at a very, very high flow of condo. It's a matter of time. Just be careful when you go into this. Even my auntie or uncle that don't really play stock also talk about this. So it's very dangerous.
So maybe I also think that the momentum may push it to really surpass Maybank. Undoubtedly, when the funds or the money, they don't know which stock to go, maybe they'll go back to Globe. So there is a chance, there's always a possibility because the gap is getting narrow and narrow. And I think if you read back the weekly bites that we share every Monday, I think we already talk about this kind of prediction, just for fun prediction, 1 month back. I think earlier in September, we said maybe Maybank is going to Top Growth is going to be the new king of Bursa. But we never say it's going to be forever. But just to get your opinion also, Sean, since this is a fun question.
Wow. I don't know whether we can really surpass Maybank, but if it does, then it will be quite interesting. But all stocks are cyclical, right? So even if it surpasses Maybank next week or whatever, whatever goes up will eventually come down also. So as you can know, the top 50 or top 100 in the Bursa over the last 10 years has changed a lot of times. Yeah. So then that's my thought. But I don't know whether Top Growth can surpass Maybank. I don't dare to speculate. Yeah.
Okay. I think for this one, you PM us we'll let you know the software. Because I don't think a lot of people will be interested in this question. Okay. How about Tenaga in what sense? You mean? I see. You plan to take this?
Okay. I just give my quick opinion. Yeah, I'll give my quick opinion on Tenaga. So Tenaga is special in a way that they are in a monopoly business. So they are the only country service provider in Malaysia. Basically, you need to use electricity to power your phone, to power your modem, on the lights, on the fan, on the aircon. You definitely buy your electricity from Tenaga. But the thing about being a monopoly like Tenaga is energy generation business is very capital intensive. Meaning to say that you know back then when we study geography, how we make electricity, right? Either you make a huge dam with water rushing through the generator and power. That one is your natural and one of the most efficient energy or methods to generate electricity, because you're using the water flow gravitational force to push the turbine and to power your generator. Tenaga relies mainly on coal. So they burn the coal, and the coal lets out energy, your energy heats up the water, water becomes steam, steam push the turbine, and then you get your electricity. So definitely you need to build huge factory and have furnace to burn the coal, and then generate enough steam to push the turbine and generate the electricity. Very, very energy, very, very capital intensive. You need to buy coal, and then coal price go up and down every day. And if you buy wrongly, then susah lah. And then you raise price on electricity, people boycott you, people cowpay you on internet. So these are all the things that make me don't really like Tenaga, because not sexy business, and a lot of inputs or factors that can just totally throw the company's profit and loss off balance. Heavy capex and heavy capital intensity also means that on and off, very big depreciation, then the profits suddenly drop, then people start to throw away the shares. So that's why I don't like Tenaga, even though it's a monopoly business. When you say they quiet, now they start to make noise already, Chun Beng. A lot of questions and comments coming in. But thanks for the questions, and I hope we share our thoughts. You also have an idea on how to look at business, because at the end of the day, it's just how the business operates. The business cannot operate, not worth to invest in. So noted on the few companies that you guys highlighted, we will definitely schedule them to upcoming episodes. So Jeremy,
I think
for investors that rely. Okay. Current market should shift back to normal, less stocks will be growing. I think there are still a few stocks that are growing potential. If you follow the stock market quite diligently, every now and then there's definitely something to pop in. It's just that maybe you won't see any limit up stocks as of recently, but still definitely there are a lot of stocks that can be growing. Coupled with the very fact there are still a lot of political uncertainty, then you have a lot of political related stocks that also go up and down. Hub Sing.
Yeah, I think all these company we won't cover in details but we will as in we'll take all these thing down, and then we will see when we are able to cover it. But you will go on like a team basis. If we suddenly go into Hub Sing, then will be all the FMCG stocks really. I don't think we'll come very near, but we'll definitely take a look on this.
Yep, definitely.
Yeah, I think all this is the same thing. Yep, definitely we will look in those. Maybe Genting, for example. Yeah, go to this question.
Interesting.
What are your opinion on?
For investors that rely on dividends heavily in normal times, what are your thoughts on going into a company despite low volume payout or really long-term holding? I think maybe I would look at it from a different perspective point of view. So I think companies that you mentioned, they are usually good dividend companies, and just because currently things are not so good, then there will be a low dividend payout. And you also have to understand that some kinds of things you have to really, because this is like a short-term emergency, and the company really need to conserve cash. It's not that they earn, business is very good during bad times and they don't pay cash. So it's a bad time, company business also get affected, and they need to be a bit more safety, thrifty, a bit more protective, because the outlook is uncertain. People back then, we never knew that COVID will come back, right? So looking now at the potential COVID coming back in Malaysia, you might be a bit thankful because companies like Maybank, Gen M maybe they pay dividend. So companies like REITs and Maybank, they conserve, they got earned, but they never pay out as much as we expected as per their dividend policy, because times are tough, and tough times usually won't last. And eventually at the end of tough time, if the company is still standing, is still operating, it means it's tough business, and tough business is what matters in the very, very long run. I don't want a company during now they pay me 10% dividend yield, but 6 months down the road, business suddenly cannot run. So which one is more riskier? And if that happens, share price definitely will tumble. And as a retail investor, definitely I will not run as fast as the big boys, and neither do I have the power to push the share price down that fast. So it's always good for good companies to have the foresight to prepare for uncertainties. Yes, dividend payout for this year, my dividend portfolio tracking will definitely see a huge drop, but I am not that worried because I don't really rely on my dividends totally for my expenditure. It's more of conserving and building for my retirement. This is maybe a small blip or small down performance if you look at the performance in the future of 20 to 30 years. So just have to be patient with the company, stay with them when times are tough, and sometimes it's the patience that really work the wonders 10 to 20 years down the road.
Yeah, and quickly to add on to Jupan's comment, right? I think at times like this, it's very important to look at dividend yield, not just absolute dividend, because it could be artificial that you feel that, okay, maybe they're giving more or less dividends. Yeah.
I think all these noted, we will take a look on this. The next one is on market cap getting low means company value getting lower. I think maybe Sean will take this. Japan is talking so much that you need to drink water already.
Yeah, I think we can put it that way, right? Because market cap equals to number of shares multiplied by the stock price. So technically, if your market cap is getting lower, means that your company value is getting lower. Yeah, put it simply, yes.
Correct. This is on the Naga comment.
I think this was related on the Naga. Yes.
I think talking about this, right? We have articles or analysis on Ajinomoto. Maybe it's time to refresh. Right, Japan?
Yeah. Definitely, we will look through Aji's latest annual report. We'll refresh it, and we'll share it with you guys. But I think I read a few articles just like the company recent performance has been very flat So maybe market did not like because it's still in FMCG, they expected it to still grow, but maybe not as much as they expected So you might see Ajinomoto share price coming a little bit downtrend, but it's still a recession-proof business. It's still supporting to the food manufacturers. So yeah, I don't really see a big issue with their business model. Okay. So yeah,
all these we will take note on all the company name that has been mentioned. I think it's also a good comment on from Ching Wai is about Julian. Maybe we can cover that as well. I mean, in the future. Let's gamble on Southern Cable tomorrow.
Can we look into it?
I think this is more of a comment. I think this is the last question that we have.
Don't gamble, bro. If you want, just play a bit. Personally, I don't gamble. I don't gamble. Yep. I think we'll answer Darren's last question. So yeah, it's also one of the topics that we previously covered. Brewery stock. Can Carlsberg and Heineken business grow at the moment? So I asked you back, Darren. Darren, do you still buy beer and drink at home, even though now pubs and bars are not opening and you cannot, drink there. So if a lot of people still buy home for consumption, then of course the company might not grow for this year because one whole big chunk during the MCO, they totally stop their plant, and we already seen the impact in their quarterly reports. So definitely the growth momentum will come to an end this year because of COVID-19. But if you want to look deeper, you might ask questions like, when are things starting to becoming normal? Do they have plans to increase sales during this period where pubs and bars or even the clubs are not opening? What is the alternative way of mitigating? Do you see any mitigating factors that are coming up? Like maybe, for example, we have like example from Heineken. They have a website called Drinkies. Basically, you go to a website, you order your beer, and then they deliver it to your house. So they already know outside, up from home consumption will definitely get impacted. So they just find ways to sell more beer so that consumers like you and me can drink beer at home. It will definitely not hit 100%, but at least they're doing something. And you never know, sometimes this kind of habits or new consumption patterns can actually become a big chunk of their revenue 2 to 3 years or even 5 years down the road. So you see, Darren never drink beer and ask whether can invest in Carlsberg and Heineken or not. You need to support the business a bit if you want to invest the business. So yeah, I think if you ask that question and if you get a few positive answers in your research, then probably you might get the bullish factor to continue to buy Carlsberg or Heineken in the current price and current market condition. Do you guys subscribe to any IPO? Personally, I haven't yet. I don't think Chun Bing has either. I don't know about Sean. Have you ever subscribed to an IPO?
I think I did once, Econ Pow, a long time ago.
How did it went?
Yeah. Roller coaster. No, I think generally IPO, the first few weeks will be up and down. So if you cannot take it, then maybe just wait for 2 months first before you go in.
But maybe it's suitable for Kanison because he's saying it's a new casino. Cannot go Genting, but Genting is open though. For your information, Genting is open. He's not part of the restriction under the Selangor or KL areas. Genting is part of Pahang, but you cannot go there lah. If you're from KL or Selangor.
Yeah. If you're from KL and Selangor.
Last comment. Any feedback, Japan?
Always reminds me of Peter Lim. Hey, Peter Lim, I don't know it's a good comment or bad comment, but Peter Lim is a Singaporean billionaire. He owns a lot of business and he also invests in football club. So I hope it's a good comment. Maybe someday I'll be like him. Fingers crossed. Of course, Darren, thank you for tuning in. We always take your 1 hour if you are loyal to us every day, every week, Thursday, 9 to 10 p.m. Of course, we don't take it for granted. We make sure that it's insightful. You learn something. You also learn to take the knowledge that we share and apply it elsewhere. Because it's at the end of the day, we are not just sharing one singular company. When we share the company, we also share the concept, the analogy and the process behind it. So when you take this process and concepts to mind, automatically you will learn to apply it to the next company that you analyze. And you also tend to see things differently. You tend to look for what can go wrong rather than what can go up. Because I think one of the key mistakes investors, normal investors like me and you do, is we always see that this company sure can go up. You never take the consideration what could go wrong. And a lot of times we are too blinded by the potential of the share price going up until we totally neglect the downside. And this is why a lot of speculators, they get caught because, wow, sure can go up because COVID come back, gold price sure go up. Of course, it go up, but if you never learn to take your short-term gain or stick to your game plan, then you find yourself holding share price at a very high position, at a high price, while market suddenly have a sell down on that particular share. So it's more on just the thought process. And we hope that every week, every Thursday, 9 p.m. to 10 p.m., you get a little takeaway and a little learning from listening to our live. So yeah, I hope that's about it. We see you the same time as always, 9 p.m. to 10 p.m. every Thursday. Yeah, we'll definitely come out with a good company that you guys would be interested in.
Okay, bye-bye.
See you soon.
Okay,
Bye-bye.
Bye.